Welcome to my channel. I'm Dr. Romano. In today's video, we're going to be discussing the real estate markets and the latest update as to what's going on. But before I begin, I want to let you know that someone was using my video in my channel on YouTube, and they were disproving my real estate video called Real Estate Bubble Popping Yes or No. And there was another one of those videos that was what to do after the real estate pops. Those two videos were very, very important, and this guy on YouTube decided that he was going to tear apart my video, and I appreciate him for doing that because it's very important, because I could come back with a new video. Now, what he did was he used two different charts, and that was the real estate market charts over 50, 60 years, and he also used the interest rate charts over 50, 60 years. And he was comparing the two charts together and to see if there's a correlation between when interest rates are high, does real estate go down? Now, he said no, but the fact is that I personally lived through real estate bubbles. And I could tell you about all of my friends and family who owned real estate. For example, my best friend, after the stock market collapse of '08, he could not sell his penthouse apartment, and he had to sell it at a 50% discount because he could not afford the mortgage. So to say that how many people in a market are desperate to sell, does that affect the market? Does it affect that people, if they don't sell, like my parents, in the late 1980s, early 90s, they wanted to sell their house and they couldn't sell it for 10 years at that particular price that they wanted. And unfortunately, they refused to come down in their price based on what the demand was for that type of real estate, as well as whether or not people are moving from the cities out to the suburbs like it was in the 1950s and 60s. Now, in that case, if you wanted to buy a townhouse or apartment in the 1950s and 60s in Manhattan, you would have actually got a discount on it. But if you were moving out to Long Island, you probably wouldn't have gotten such a discount. Does that make sense? But you have to remember, in the 1950s and 60s, the average person was much more richer than we were. And when I say this, is because my grandfather's era was able to save a huge chunk of money every month. It wasn't that he was frugal, it was just that his income ratio to the real estate market was more. So he could literally save his money for 5 years and buy a house cash. And so the 1950s and 60s, it was a very different type of market. People bought with cash, as opposed to today. You can't put down $600,000 on a house because you would have to make, let's say, 200 grand a year to save that kind of money and to also have living expenses. And after 5 years, then you have enough money to put down on a house 100%, and there's no mortgage needed. Now, of course, because of a lot of situations that happened, people don't realize what happened. Real estate prices on a chart looked as if they always did go up, but the level of income did not. So I'm not going to provide charts because I'm talking about what I'm seeing in the chart. I'm a doctor of finance, and so I'm not someone that needs to understand what a chart looks like because I've already learned these theories. So my analysis and what I learned is that when interest rates go up, it affects certain type of markets. It doesn't always affect the typical market like the low range real estate or the high-end real estate. It just depends what era is happening, where we are in that market cycle. So right now, because of Zoom and the virus that happened, a huge change has happened. A lot of people are working from home all over the US, even outside of America. Before we continue the video, please remember, if you want to say thank you and you enjoyed my video, please do thumbs up. It's right there. Thank you so much. What's happening is that those people from Manhattan, those big cities, their standard of living is much higher. It costs so much more. So for someone that's used to spending $3,000 for a one bedroom in Manhattan for rent, to spend that on a house in, let's say, Texas, of course they could afford to buy a bigger house than a typical person in Texas. And of course, that high-end or mid-end real estate market's going to be booming. But what about for the average person? The average person from Texas is not making more, and yet they're having to get more mortgage and put a higher down payment on the same house as opposed to 5 years ago. So every market is different, every market cycle is different, because it just depends on the market. Of course, the low-end market, when interest rates go up higher, the average person won't be able to afford that same house or that same apartment. Or logically, why would you buy a condo for $400,000, let's say, for a one bedroom? And so if you put 20% down and then you have a mortgage, let's say your mortgage is more than rent, double rent, let's say, let's just use that as an example. Well, it wouldn't make sense for you to go buy a house, because you could put your money in a savings account and earn 8% interest when interest rates are high, as opposed to and let it grow and double. Or you could put it in an investment portfolio and let that double. If it's 20% per year, that's 2.5 years before that money doubles. So it just depends what's going on and the certain circumstances at this particular moment. And so and there will be a real estate market bubble that collapses. That's normal, because right now the cost of sheetrock and plywood has come down considerably, even with oil prices so high. So that right there tells you we're in for it. But you don't need to worry about if there's a real estate bubble. You don't need to worry about that at all. You have to remember, it's up to you and your logical reasoning. If you want to buy a house at the top of the market, you do so. But the likelihood of you selling it and making a profit is not going to happen for 8 years, at least, at the minimum. All right? Because the low-end market, you're going to have people who lose their job, who can't afford to pay their mortgage. Like in 08 and 09, a friend of mine here in Colorado, his apartment that he had, it was a beautiful apartment, he foreclosed on it because he couldn't sell it. So does that affect the real estate market as a whole, people in those situations? Does that bring the real estate market prices down on a chart? See, that chart that these people are looking at, the real estate market over 20, 30 years, 50 years, not everyone is going to foreclose on their property. Not everyone's going to sell their property for a 40% discount because they're going to foreclose and they want to get out of their mortgage. So all these things happen in a real estate bubble, but are they recorded on charts? So if you take a chart and you look at the real estate chart in America, the average cost of real estate and the interest rates over 100 years, 50 years, whatever it is, it's not going to show what's actually happening. It's going to show that there's a little dip in the real estate market. If they have the opportunity to live outside of Manhattan and buy a house, instead of buying a beautiful condo in Manhattan with high crime. So right now, in the cities, you're experiencing high crime, and so that's going to also bring down the real estate market. Why would someone in Chicago right this weekend go buy a condo in the center of Chicago where there's shootings? No. So that also affects the real estate market. And maybe on a chart, you're not going to see that interest rates really affect the real estate prices, but you have to look around you, all your friends and family and your customers. Are they being affected? So it's very difficult to look at two charts, the real estate chart over 100 years and interest rates over 100 years, and come up with a conclusion, okay? As a PhD graduate, and while I was in school, we were taught not to be biased with our data. And we were brainwashed over and over and over. And every time I wanted to use a journal article that was scholarly written, that was minimum of 30 pages, I had to get the approvals by my committee before I could use that journal article for my research. And that's how hard it is to do PhD research. It's not just easy, you just write at your desk for 4 years or 5 years. No. My data was concerning hedge fund selection. And so I was researching everything about hedge fund selection, how to improve it, what's wrong with the industry, how do funds of funds select hedge funds, etc. I had to also prove it with actual hedge fund returns. So what I was writing about is if I wanted to be biased and say that smaller hedge funds are not efficient with managing capital, I could have found the data that proves that. However, I had to be totally unbiased what I saw. So I didn't care if the data was telling me that hedge funds, larger hedge funds outperform smaller hedge funds or vice versa. I didn't care. I was just writing about it. But I had to prove if it was yes or no in the actual data. And once I put those returns of the hedge fund returns, I concluded with the statistical analysis that it was true that smaller hedge funds outperform larger hedge funds. And of course I know why, because I used to work on the trading floor, because of position size and so forth. And of course larger hedge funds they have traders working for them, and it changes the whole risk scenario. And there's a lot of other things that go into it, but I'm not going to talk about that. This one is talking about the real estate market. And so for those of you who do have real estate and you're not looking to flip it now, hold on to it. If you could afford to pay your mortgage with a year's, so you have to basically save enough money to have at least a year's payments. So if you have enough money saved in your savings account, not an investment portfolio, and a savings account, then you'll be okay. Because if you lose your job, you have a year to sell or find a job. You have a year to sell your real estate, or you could find a job within a year. But you also have to remember that you may have to pay. So if you did put 20% down and we do have a 30% drop, well, what happens to the 10%? Okay, exactly. So you have to analyze your situation, and if your real estate already went up 50% since you bought it, then you're in a really good position that you don't have to sell it. Make sense? And you've owned it for 10 years, 6 years even. Once you own real estate for 7 years, 6 years, you don't have to really worry about the real estate market, how it went up so much. Because back then, 6 years ago, it was actually reasonable amount of money and what you paid for it. And so that's what I wanted to talk to you about. And even though you look at a chart, you could be very biased with that chart. And so you have to be very careful. And for those people who out there that are on YouTube and you're looking for data that backs up my claims, well, you need to be really careful what you're reading. Because you also you must remember that you need to live through that era. Well, why did your friend lose their apartment? Because they couldn't sell it for what they paid for it. Why did your uncle foreclose on his apartment or house? Because he lost his job and he didn't have savings because he didn't put much down on that house. So even if it did go up a little bit, it still drops. And so there's different scenarios for every situation. And that's why, so like right now, Colorado, the mountains, those vacation properties went up enormously. I'm talking about 50-60% over 3 years. In Vail, Colorado, in Beaver Creek, in Bachelor's Gulch, those houses were $3 million back then. They're $10 million now. And so for those people who have vacation properties that they're trying to unload when the real estate market collapses, now, of course, with this major move that happened where people left the big cities and they're moving to the country, that's going to be a new era to analyze, because what's going to happen? Are those pieces of real estate going to become more desirable? Or are the city apartments and townhouses not going to be so desirable? Are those going to lose more money than the country houses? I don't know. I'm looking forward to learning. Thank you so much for watching. Please remember, if you like my videos, to subscribe to my channel so you get my future videos. And please remember to send me messages to the live chat. I want to answer your questions, so please do so. I love answering questions, and I love learning how you would ask a question. And please remember to also do thumbs up if you like my channel and you want to say thank you. And then finally, please share my video with people that you think would like it. Thank you for watching.